know, there's only so much, you know, that you can
Right.
do.
I'm gonna, I think I hit broadcast, so we're broadcasting now, right? Ellen, if you want to
Yes,
shake.
we are.
Okay, great. So I'll have you monitor the Q&A. It looks like we have 6 participants. I think it wasn't showing up when I had it broadcasted, maybe. So welcome everyone. Thank you for tuning in. Did you just switch my slide? Who switched my slide? Don't switch my slide, Ellen.
I can't touch your slide. I'm sorry.
That's okay. Welcome everyone. This is our second session for how your business can beat COVID-19. Thanks for joining us. We are going to have a question and answer, and if you have a question, Ellen McBride from my office will take that in and try to insert it while we're discussing things. I have on the panel with me Joe Cruz, who is a CPA, and Joe, you're originally from Tucson, aren't you? You've been living here your family's been here for a long time, right?
1960.
1960, yeah, I thought so. And you're in Barrio Viejo, that's where your office is, right?
Where I'm at, yeah, in my office, downtown.
Cool. And so we have Joe's information on our Facebook page if you want to tune into there. And he has a website and he has email and everything. It's all there on our Facebook page if you want to follow up with him after this particular webinar. Joe will be chiming in mostly where we're talking about the PP loans and the tax, I don't want to say deductions. What do we call it? Tax abatement? What's the term, Joe, for the tax considerations that we get from the act? What would you call that? Or what do they call it?
It's the CARES Act, and there's a lot of little ones that followed after that, but it's
right.
a number of tax savings and deductions and credits.
Okay. So it sounds like you're struggling just like me to know how to define it, but it's basically you don't have to pay certain taxes, or they're extended. The payout time is extended in terms of like the payroll.
It's you know, tax relief.
Yeah,
basically. That's what it is.
Exactly. So we're going to be talking a lot about the loans today. We may get to some of the leave stuff, but I am going to have an employment attorney next week, Tom Cope, join us to really dig it deeper into that. But because the sole proprietor and single LLC opportunities are opening up this Friday for applying for the PP loan and some of the other loans, I don't know when that's opening up, but I think it's on Friday as well. And then last week we had just the general EIDL open up for just general business that fall within the definition, the under 500 and other certain standards under the SBA. And the recent Treasury SBA FAQ that came out that clarified some things. So we're going to have some updates from last week, and we're going to follow the same general agenda, but we have some additional information because there's information coming out daily about this, and you just need to be mindful of that. We're doing the best we can. I know my office spending a lot of time, and I'm sure Joe is too. He's processing actually PP applications right now, getting them ready to submit. So, and we're getting clarification from the organizations that we belong to, from the government themselves. So it's an ongoing process. So the information here is something that we vetted, but it's always best for your particular situation to speak to someone if you have a specific question about something that comes up with relative to the loan or the leave that you are trying to pursue for your business. So I'm Christine Anderson Ferraris. I guess I should say that with A. Ferraris Law. And on the panel, as I said, is Joe Cruz, who is a CPA here in Tucson. And there's his website, TucsonCPA.com. I'm just going to jump right in. And if you have questions, post them in the chat room. And then it's *9, right, Ellen, for if you're on the phone and you want to raise your hand to ask a question because you're not online. Just go ahead and do that, and Ellen will take note of that, and she'll bring attention to your question. So we're talking about, what mostly we're talking about is the CARES Act. So it amended the SBA, and it's in order to help businesses keep workers employed. The the Paycheck Protection Program. It's the 3 Ps is what we call it. Instead of some of the normal protections of these loans, they've gone up a notch, and usually what would be an 80% federally guaranteed loan is now 100%. So there's incentive for the banks to do these, because generally speaking, it's not a great money-making source for banks, so they're a little bit reluctant. And now they're even more so because of all these new types of benefits will make it harder for them, and they don't have processes in place. And so they're scrambling like anything to try to get ready. And some banks are saying that they are ready when they're not. Some banks are very transparent, saying it's an ongoing process, but they're doing the best they can. They're looking for more guidance from the SBA and the Treasury. So it's something that you just need to know that things can change. So as I said, these are government guaranteed loans. And the really unique thing about this is the forgiveness component and the deferred payment component of these loans. And the EIDL loan has that 10,000 advanced, that's just based on your credit report, but we'll get more into that. So I don't want to get ahead of myself. So who's eligible? Any small business that has fewer than 500 employees. Now I've read some information where above, businesses that have more than employees are also eligible, and there are other loans. It's not just these loans. The SBA has their traditional disaster loans that are available too, but this is the one that's getting all the traction in the media, the Paycheck Protection Program, because of what it offers. It's so unique and so beneficial for employers and employees. So sole proprietors, independent contractors, these particular sectors, which is a big part of our small business, are eligible for these loans. And where normally they would have to jump a bigger hurdle, they're not having to jump those hurdles, but they still do need documentation. And Joe will get into that a little bit more later. An individual who is self-employed, sorry about that, who regularly carries on any trade of business. I'm a little bit, I'm not understanding the distinguishing factor between independent contractor, sole proprietor, and self-employed. So I'll leave that to Joe to maybe explain if it is necessary to explain. Sometimes the government wants to add more than is necessary, and it makes things confusing. And that's why you have folks like Joe and me trying to figure out what they actually mean. The tribal business concern, as long as they meet the SBA size standard, and that's all at the SBA website. And veterans organizations. And I don't think I mentioned nonprofits, but they're all eligible for these loans. Yes, go ahead, Joe. Go ahead.
Well, one of the things that we've been noticing, because the timing of this situation with COVID-19 couldn't come at a worse time for CPAs, because we're thick in the middle of doing our work and getting returns out. And then they decided to extend it to July 15th for just about every type of return to be filed and paid. So what happens is that this triple P, we call it, this program came on. Employers are trying to get a handle on that and submit it to their various lenders. And what's happening is that most of the businesses that we have, a vast majority of them, are going to be under 100 employees, probably under 50.
Yes.
So what happens is that we are finding now, because everybody went and applied for these loans, those that have over 50, that some of the banks are turning them away or asking them to go look for alternative sources. So one of the suggestions I have with Triple P is that they make every effort to make contact with their banker and ensure that they're going to be able to process before they waste a week or 2 weeks of time, because by then it might be too late. So they need to make sure that their bank is going to be on board so that they can submit this information and get this loan processed.
Yeah, that is key. And if you have any kind of relationship with a bank, that's who you should go with first, because they're going to know you, probably like you, and know exactly what your circumstances are. So it's best that's who really you should go to. Now, and if they can or aren't doing, your particular type of loan for your particular type of size, they may have a connection to somebody else that will help you.
And then the last thing, if I may just add
Yeah,
one,
please.
the documentation they're going to require, you need to have that ready to go. So have the package ready to go, even
Yes.
if the bank says, yeah, we can't help you, but at least you have it ready to go, because they might ask you for it there and then, and you don't want to have to go back and spend a lot of time trying to get all this information together.
Yeah, we're going to get into some of the documents that sole proprietors can be, because there's some general information, and that's what we have, because nobody is really ready. Like I said, that advanced under the EIDL loan, they're just doing that. That's a one-page application. You can go right now and probably fill out, if you know your gross revenue and cost of goods, you can fill that out right now, and people have been filling them out on the SBA. That's the one that you go right to the SBA and apply for. And even if you don't get the EIDL loan, you get that 10,000. And that's not based on a personal guarantee or collateral. It's just essentially based on your credit report. So as I said, the SBA loan, 7A loans, those are the general disaster loans. If you go to the website I have there, which is the sba.gov, and then just go under the funding programs, it gives you the list. There's like bridge loans. If you have already a relationship with a bank that can already validate a lot of the information that they're going to want. Usually it's a rigorous process to get an SBA loan, but I think they have strong direction from Congress that those aren't the standards that should be applied with these loans. You still need to get your documents together, like Joe said, and you should be doing that now, contacting whoever helps you with your finances and your tax preparation. And it's better, I know we have these extensions, but if you want to actually apply for a loan, you should start moving and getting your documents together now, or actually last week, to be honest.
Yeah.
So the EIDL loan, that's what is getting a lot of traction in the news. And this is the economic injury disaster loan. This is the one where you can go and apply right to the SBA. Now, all the other loans, that's where you go to your bank. But the EIDL loan is where you go to the sba.gov website. And like I said, it's 10, 15 minutes if you know some basic information about your business. The max, so you get the advance, generally speaking, they're saying 3 days, but I think I applied, last Wednesday? I haven't seen anything yet. And the max is 2 million. What they're going to do for the loan, and maybe you can speak to this, Joe, they don't ask for a lot of information in that one-page document. I imagine that they're going to be asking for some more information in terms of, our financial history with the firm and so forth. It's up to a 30 years repayment, which is awesome. 3.75 for the maximum interest for profit, and nonprofit is 2.75. And my understanding, Joe, and I think this applies to all of the emergency loans, is that it's an automatic deferment for 6 months for payment. Is that true? Is that what you understand?
That's correct. Yeah, and then what they've got to do, there's just basically two components to that. They ask for the gross receipts or the gross revenue, which is money that came into your company.
Right.
And then if you have cost of sales, which is basically if you're like a contractor, if you make stuff to sell, you're going to have a cost that goes into making that item. You'll have a cost of goods sold. And those are basically the two numbers you need, and submit it. And,
Here's what was confusing about the application for folks in services and who most of their costs are related to, employee or subcontractors and so forth, is that it didn't have a space for like just general expenses. It just said cost of goods sold. So for me, I was thinking, well, there's no place for expenses. So I just put my expenses under the cost of goods sold, which probably wasn't correct, but it wasn't asking for expenses. So I'm like, well, what's the deal here? I mean, I'm not a pardon?
I'm sorry. The definition for cost of goods sold.
I know. Yeah. But how will they know exactly how much I made if they're not asking for expenses on the application? That's what I was.
That's clear as to how, because if you've got a company that applies, I had a bunch of clients apply, they got $2 million in receipts.
Right.
And then you've got a CPA firm that has, you know, $300,000. Are they both each gonna get $10,000? I don't know, but I think they're not. You know, it's up to 10,000, but I don't believe
Right.
that
Yeah,
that's how
I've
they're
heard,
up, you
I've
know.
heard, I've heard some things, it's gonna be based on the number of employees, like $1,000 per employee, but you know, we hear all kinds of rumors. And that's just from the national group that I belong to, where we're kind of, some of us, not everybody, of different attorneys that are looking at all of this and looking what we hear, you know, through people who have connections that maybe in DC, I don't know. So this, I'll return back to the slide. So the money that you get can be used for sick leave, payroll, or payroll costs, increased costs, rent, mortgage, and repayment obligations. You know, your debt obligations that can be used for this money that you get. Like I said, this is supposed to be dispersed within 3 days after you apply. That, you know, they really poking the fire to get the banks to, or the SBA is trying to get, I guess, is the one that's going to be doing this. And like I said, I applied last Wednesday and I haven't heard anything yet, but I have heard other people have received money, and you put on the application itself, you put your bank information, and you're supposed to, it's just supposed to be, you know, deposited right in there. And as I said, you know, even if you don't qualify for the eventual EIDL loan, you get to keep that money. That's it. That's what I understand, right, though? Right? Unless you committed fraud. Unless you committed fraud.
Yeah, yeah. If you have committed fraud, it's a whole different story.
Yeah, sorry.
Attorney as well, right?
You don't get to screw over the government, sorry.
But you get this money. I mean, it's supposed to come out quickly and get you up and running while the PPP loan is being processed, because that's going to take some time. That's supposed to go quickly, but it takes some time. So this is supposed to be quick, 3 days, but we have yet to see that money, anybody that's applied for it.
Yeah, I heard like back east, maybe they're closer to DC, so they got the money because that's the best I can figure. I have some attorney friends in Pennsylvania, and they're like, some of their clients got some money, I guess. I don't know. Maybe they know, maybe their bank knows somebody down in DC. The one thing I wanted to mention about this, the Paycheck Protection Program, that's the other loan program we're going to get into. Whatever money you get under here, you can roll into that. And the idea behind that is you may want to do that because it's only a 1% interest rate on those, and that's what I heard anyway. But the period of time that you can, I think it's 2 years max for that loan. So depending on your situation and what you're thinking and what you're planning for and expecting in terms of income and cash flow, you know, and this is another reason why you need to sit down with someone. And you shouldn't be just thinking about next month or 2 months from now. You got to be thinking about next year and where you're going to be. You don't want to make decisions now and start applying for stuff when you may need to apply later and revisit it. And maybe your bank will allow you to do that, but that's a discussion you need to have when you're strategizing with looking at all of this funding. I mean, I think you should go obviously apply for the EIDL, and then figuring out, you know, what you're going to be eligible for and what other programs you may want to, you know, throw your hat in for. That probably should be discussed with your banker or your CPA, your bookkeeper, lawyer, whomever. So the Paycheck Protection Program, here we are. So this.
Can I add one thing?
Go ahead, Joe.
So basically, the deadline for submitting anything under the PPP program is June 30th.
Yes.
And of course, we know, or perhaps they don't know, is that it's first come, first served.
Right.
So within probably the next couple of weeks, the money's going to run out. Because
I don't know about that, Joe, because I mean, 340 billion, and they said they might a lot more. I know that's what people are saying, but I don't know.
The rumors are that there's going to be another another $1 trillion that's coming. And who knows? But the point is that if, you know, after this this webinar, if you've not applied, if you've not contacted your lender, you've got to do that right now.
You really do. You need to start thinking about how and what. And even if you don't know all the answers to your questions, you just need to start doing something. Do something. Look, you know, file that EIDL application. That's 15 minutes. You can get those numbers. from, you know, just looking at your bank account at the very least, you know, from last year or whatever, and talk to somebody, whoever helps you with your taxes, or if you do them yourself. They're not difficult numbers to get, you know, like as Joe said, gross revenue, cost of goods sold.
Let me ask a question real quick, if you don't mind.
No, please.
There was a question. Can you talk more about the cost of goods sold on the idle application? Should we enter expenses there? That part was confusing to me as it was to you and to others.
Yeah, it was to me as a services, and I don't have, I mean, the way I structure my business and things, I work it like a cost of goods, where I allot a certain amount of time and a certain amount of personnel for that particular project. So for me, I'm always thinking cost of goods. That's my mindset. But, and because there was no place for expenses, like I said to Joe, I put what it cost me to get that money that I put down as gross revenue, you know, what the cost was. So are they going to kick it back to me and tell me I made a mistake? Maybe. But as Joe said, the traditional cost of goods sold, and Joe, if you want to reiterate that.
Yeah, the traditional cost of goods sold is basically a contractor that has the building cost,
right.
the
Materials.
overhead, all that. Materials,
yeah.
overhead, direct labor, materials, and overhead is the definition.
But so labor is included in that?
Yes. So,
okay.
But you're producing an item to sell. That's what the definition of cost of goods.
I feel like I am. I'm producing legal service and I'm selling.
On a tax return, the cost of goods sold,
right.
There is no space for a service-oriented business.
There isn't.
An attorney, a CPA, a doctor, so
right.
on. So there is no list. So by definition, there is no cost of goods sold. So what we did is we submitted it, right or wrong, because we wanted to get it in there, and we submitted it without any documentation except for the income, and that's
right.
it. And,
I mean, they're not asking for anything else.
No, they're not, because
they're not.
Again, cost of goods sold
right.
would not normally apply to, and does not apply to service-oriented businesses. It's those who are creating something to sell.
Yeah, I've heard both. You know, some people just put their expenses in there because they just didn't want to make it seem like they didn't have any expenses, right?
Yeah.
So
and this may be along the same lines, but how would somebody show a loss of revenue for jobs that were bid and weren't able to follow through on?
That's going to be follow-up, I think, with the loan application itself. You know, right now, that I think what that one pager on the SBA, that's through the SBA, is for just that advance money. You know, they're just looking at people's credit scores from what I understood. What do you think?
Could you repeat that question again, Ellen?
Sure. She asked, how do we show loss of revenue for jobs that we bid that we have not gotten? Yeah,
so see, there's another thing. So we talked about cost of goods sold. Now we're talking about revenue that has not been realized. So that depends on their accounting system. And most people are on cash basis. Cash comes in, they report it, cash goes out, they deduct it. So if they bid on the job and did not receive the money, did not get the contract, there really isn't any lost revenue unless they've reported it before. And it becomes a technical accounting system question. But I understand they're talking about the losses, but that's where the payroll and all the other things come in to address that, the payroll assistance and some of the other tax credits.
So the follow-up question is it more?
I wanted to speak to that just for 1 second, and because if that happened during this period, that relates to, you know, a harm by that if that is a potential harm under COVID, that's something you want to document. And if it wasn't related to the COVID period, then not. But I just want to use that by way of example. That is something you want to document to show that you were harmed for whatever reason because of COVID.
Right, because there's another thing there in the tax law, and we can get into that later. But they have some metrics that you have to meet in order to qualify for some of these tax credits. And a tax credit is a great thing because that's money in your pocket. It's not a pie in the sky deduction. depending on whether you have a loss or, you know, whether you can claim that, but a credit. And we'll talk, I'm sure, about that at a later time, but.
Yeah, that's slide 14. Did you
So
want
one
to?
more question, I think it goes along the same lines. Is it more to our benefit to list the expenses or leave it as 0? I'm a service-based company, one person LLC.
There is no place on the SBA application for expenses. That's what we wanted to reiterate. That's why I ended up putting that in the cost of goods sold, because there is no place. And so what Joe is saying, that he submitted an application for a services like business. He just left it, the cost of goods sold, empty, and just submitted it with the, I think it's the gross revenue, right, Joe?
That's correct. That's
Yeah.
correct. Yeah, because the worst scenario, remember, if you put the item in there and it doesn't belong in there, then they'll let you know, or they'll make an adjustment. But the important thing is to get it in there,
Right.
and have an explanation for why you input these expenses under cost of goods sold. Should they ask, there might be a follow-up question, you know.
Yeah, and that's what I figured. I was like, I hopefully I'll have the opportunity to be able to explain that. I mean, I know some people messed up different parts of it and just resubmitted a second application. I didn't see anything there guiding us to do that, so I just said, I don't want to confuse the SBA anymore than they're going to be. So I'll just keep it at that and wait for a follow-up. So the other thing about these that's really cool, there's no collateral personal guarantee under these loans. I mean, I have the slide there. Everybody should be able to see it. The calculation for your payroll costs, we'll get to that on the next slide. Again, you can refinance your EIDL loan into this, which has a better interest rate. My understanding, it's 1% for this. And here's the really awesome thing about this particular loan is that for the period between February 15th and June 30th, whatever amount you get for and apply for this, you can get that entire amount forgiven as long as you meet their requirements of protecting people's paychecks and not messing up the ratio, which right now, just generally speaking, is that 75% of the money that you're using this loan for during this period is for payroll, and only 25% for those other expenses that you can use it for, in terms of the mortgage, in terms of the rent, in terms of debt repayment. So that's what's key, and that's why you want, I mean, I'm recommending to folks to have a separate account. You know, have a separate bank account for these loan proceeds and for the expenses, so that you can track exactly what came in and what's going out, and it's not going to get confusing for you to then reproduce when you go to seek that forgiveness. And I think that's where a lot of folks are going to need some help, is to make sure they get to take advantage of the forgiveness aspect of these loans.
And that's really good advice, because we always use the phrase documentation, documentation, documentation.
Yes.
The money's going to go into the bank account, and it's going to get mixed up with everything else in there. What you don't want to do is put that money into your personal account and then have to, you know, start tracing that.
So how much can you borrow? You can borrow up to 2.5 times your average monthly payroll costs. And so in the slide here, it talks about the different, what is part of payroll costs, you know, vacation benefits, what you have to pay out for sick leave and medical leave, healthcare benefits that are provided to a group, retirement benefits, state or local tax assessed on the compensation of the employee. One of the things that I just recently distinguished is this $100,000 max. I think a lot of folks were thinking that applied to the total compensation, but the statute or the act itself says $100,000 in salary. So the way I'm interpreting that, and Joe, you can chime in here, is that you can't include in your payroll costs anything beyond $100,000 in the salary, the cash and wages. But if there's other benefits that go above that 100,000, that can be included. And the Treasury frequently asked questions that they put out on April 6th clarify that the non-cash compensation can go above that 100,000. So if you're a sole proprietor or you're, you know, a business owner, and you paid yourself $90 or $100,000 or $120,000 in cash, and you had other benefits that brought you to 160, that 20,000 in cash you won't be able to include, but the other part that goes above the $100,000 that's non-cash, you can.
That's correct. I interpret it the same way, and so does my institute. It's interpreted the same way.
Okay.
So it's base salary, and then every other benefit and retirement and other things that are added into the payroll afterwards still get counted. It's just the base salary up to 100,000.
Yeah. And then sole proprietors, I have some information down here. If you want to add on to that, Joe, feel free in terms, I think you mentioned like 1099s in terms of documentation.
Yeah, the documentation, and here's the reality is, you know, how this is going to work. So if you're a sole proprietor, independent contractor or whatnot, and you don't have 1099s and whatnot, you'll have to prove it a different way, and that's going to be, you know, through a bank account, through a good set of books, should they ask for, you know, any of this verification. And, you know, they had said before that they wanted to include independent contractors in the top portion for employers, but it definitely does not. When you do not include 1099s, it's just employees. Yeah,
right.
And they make it really clear.
Yeah,
so
that was confusing at first, I think, for a lot of folks.
Yeah, the documentation is going to be 1099s or other good, solid documentation, bank accounts, things of that nature. And the expenses are pretty much going to be the same for employers or for sole proprietors and independent contractors. Expenses such as health insurance, benefits, and things of that nature. It'll still be the same documentation for either one.
Yeah, so we were talking before, you know, we got on the webinar, Joe and I, about the calculating the payroll costs for folks that maybe don't have a full year, a 2019 year of payroll or having been in business. I can use myself by way of example. My firm now has 4 employees and an independent contractor. Last year, up until October, I had like I had an independent contractor, and I wasn't really paying myself because I wasn't making enough money because I just started. So my question was, okay, so what do I use? And in the act, it provides that you can use this January 1st, 2020 to February 29th, 2020, if you asked for it. And I'm like, so well, who do I ask? That do I ask the lender? Do I ask SBA? And when do I ask? So there's some, I don't know, Joe, maybe you can speak more to that. I mean, and the other thing too was they also, the CARE Act, and I think the interim rule was confusing because they also said that you just use 2019 in itself, the calendar year. And then there was, I don't know if, I think it was the interim rule said, or maybe the act said, I get confused. One of them said that you use the year just before you apply or get funding on your loan, or, you know, submit your application. So if you submit your application,
the way it works, I've already done a whole bunch of these.
Yeah.
And what we are using is 2019 historical information.
Right.
But now we're on April 8th.
Right.
You've already got payroll for the first quarter.
Right.
Theoretically, you can use the second, third, and fourth quarter of last year, first quarter of this year, for those businesses that were in existence last year or prior to that even. So that makes it easy, and that's what you want to do, because if you're a seasonal, let's take a CPA firm. A CPA firm will have more wages and salaries during these 3 months than the other, but perhaps they've gone up, so you got to do an analysis, and that way it'll maximize the amount of the loan you're going to request, right?
Yes.
And then that's the others that have not been in business for that time. And let's say that you don't use January to February. Let's say that it's more representative to go back a few months into 2019.
Right.
As long as you're able to support that number, I think you'll be okay. And you want to maximize, again, the amount of the loan that you're going to request.
Right. I think that's another, this is, the takeaway from this is that you have some flexibility here in terms of what your particular situation is for your business, and for your, if you're an independent contractor, if you're a business or whatever, in terms of, you know, where it best serves you to get more money. Is that fair to say, Joe?
Yes, that's correct, yes.
Yeah. And so, but at the same time, you don't want to put like a lot of employees in there if you feel like you're going to be laying folks off, because if you lay people off, you're going to push yourself out of that category of getting forgiveness. And so you really need that whole forgiveness component. You need to be mindful of if that's something you want to take advantage of, and it should, because that's money that you get forgiven and you don't have to pay it back. So
yeah, and the other, I'll just, if I may add one.
Yeah.
So we just did one, for example, I have a doctor that applied, and his whole staff went on leave because they were requested to shut down. So now it's a situation where they don't have these folks on payroll, so he has to request that they come back to work and whatnot, but some of them don't want to come back to work.
Mm.
So you can't force someone to come back to work, at least I don't think you can. And so then how is that going to affect the forgiveness portion of this if the employee doesn't want to come back? So then they have to scramble to perhaps hire somebody else in their place so that they meet this 75% rule so they can get this forgiven.
Yeah.
A lot of things that you have to think about.
Yes.
But the point is, for submitting this application, getting your payroll, historical information, and submitting it. And then the rest of it, you can worry about that at a later date.
Right. You're going to have some time. I mean, it is a relatively short period of time, February 15th to June 30th. And as Joe said, you can rehire somebody else to substitute in for that employee, right? It's not the employee that you need to keep. It's the job. And so somebody needs to fill that job for that purpose. And so that's what they're wanting.
Like my doctor, for example, he has to have certain staff on there. He just can't hire half the staff. He's got to have certain staff there. So if one of them doesn't want to come to work, he's going to have to hire another person to replace the individual that doesn't want to come back.
Right. That individual doesn't want to come back, and it's a legitimate reason. I mean, then you have to look into that. Is he doing what he needs to make it that environment safe and whatever? So that gets into a whole other sort of conundrum relative to leave and unemployment and all that. So in evaluating eligibility, lenders are directed to make sure they take into certain considerations. And in the act itself, it has different kinds of considerations for different kinds of businesses. I was happy to see, as a female-owned business, and that's under 2 years, that was supposed to be a priority. The Senate instructed to lenders. And obviously, they don't want folks applying for loans for duplicative purposes. So like if you're seeking for payroll and 10,000 actually covers it, you shouldn't be applying for the PPP. But that said, you may need that PPP for after you run out of that $10,000 funds, but it can't be for that same employment period, right? It can't be for the same.
Yeah, there's something I want to add on that.
Yeah.
And the way we read it, most of us CPAs read it the same way, is that if you get the EIDL loan, the emergency loan we talked about earlier, the $10,000, and you apply for the PPP loan, that you're theoretically not supposed to do the two. If you do the two, one of them is probably going to have to be paid back.
Yeah, well, they're going to discount it. They're definitely like whatever, if you end up getting the PPP, whatever advances you got under the EIDL, and because you can roll it in, right? You can roll the EIDL into the PPP, but whatever it is, you're going to get, it's going to discount the loan based on what you've already received.
That's correct, yeah. But just a reminder to people, if you get the two of them, like exactly what you said, if the $10,000 or the other one covers the payroll and the other expenses that will allow you to have this forgiven, then you shouldn't be getting the other loan, is how we read it.
Yeah. I think it just depends on how much money you need, and people shouldn't, right? And we could be in, I mean, generally speaking, they're saying the covered period is February 15th to June 30th, like everything's going to be okay right after June, but I'm not convinced that it is. And so I know you have to apply. You may want to wait to really understand what your business is doing and what it's not doing and what you really want to dedicate yourself to for the next several months and what money you need to do that.
That's correct.
So here's just a recap. The maximum loan side is 10 million. And that's for the EIDL, right? I think that's for the EIDL.
Yes.
Is that for the PPP?
No, I'm sorry, that's the PPP.
Yeah. Yeah. And their max loan is based on your payroll between the period that you get to choose that we explained back there. If you weren't in business between February 15th, talks about that average monthly payroll cost from January 1st, 2020 to February 29th. And then there's some interesting thing, if you actually have an EIDL loan that you applied for before all this came out, that and you want to refinance it into a PPP loan, you can do that, and you can add that outstanding loan amount to the PPP.
Yeah, because it's obvious if the 10,000 is not enough, then you're going to need more money, and that's where the triple P comes in, and then potentially all of it could be forgiven.
Yeah, and the interest rate, I mean, the one thing about, I want to remind folks is that PPP is only 2 years right now.
Right.
And they both have deferred payments, which is good. I don't think we really emphasize that enough, so that you don't have to pay for 6 months from when the loan is funded. So you have 6 months, so that's another awesome bonus. And then the EIDL, they have payment, the period of repayment can be up to 30 years. So, I mean, these are all, like I said, it's a lot of information. I know it's overwhelming. It's taken me a good 2 weeks to be able to actually talk it, because I was reading it and I was like, oh my goodness, this is just too much. But now I have an understanding.
At least 8 updates on this already.
Yes.
From
Yeah.
and
Yeah. I
8
know.
of them. And I think I've got 4 more still to go.
And there's so much information out there. Everything is a COVID update. Oh, everything is a COVID webinar. So I've been just like listening to everything, and then you're getting the best of what I found. I mean, I've got a lot of time into this, but I want people to understand because it's not easy. And so please make sure you do understand before you make decisions, but you need to make a decision. So Joe, I got this slide here for you, employer tax relief, because you're the tax dude.
You want me to go over the slide?
Sure, if you're good.
Yeah, so basically, it talks about, I do want to touch on that. They ask if there's basically a number of tax reliefs for employers, right? So one of the ones that they have is, they call that the one that you have there on your slide. It refers to a significant decline in gross receipts.
Right.
Or if they've been affected, they've been ordered to shut down, partial shutdown, then you qualify for that, and it's 50% of the wages up to 10,000, and that's not for quarter, that's for the whole year for an employee. So the way this is going to look, and I've not seen it, they've updated their payroll forms, but theoretically you'll end up computing what your payroll taxes are. You take the $10,000 for that employee. I assume they're making more than that for the year. You take $5,000, you apply it towards that, you'll end up with an amount that you do not have to send in to the government. So that's kind of like money that's sitting in the bank that belongs to the government anyway. You get to use it for your staff, and that's a good way the government is allowing businesses to get money into their hands right now to use for their payroll. And then they have this other aspect that says about significant decline in gross receipts. So they have some metrics for that. And what they do is they do a look-back period. So they look at your first quarter here in 2020 and compare that to 2019. And if it decreased by more than 50%, then you qualify for that particular credit. And then they say, well, once your business is back up and running compared to what it was a year ago, and you meet that metrics, then you stop being eligible for this particular credit. Okay, and what the other one you have on there is delaying the payroll taxes And what that is, when you do your payroll taxes, you have the employee's portion you take out, then you have the employer's portion that matches the FICA and Medicare. And what this allows you to do is that portion that the employer is going to match for that employee, the 6.2%, which you would normally take that and deposit it, send it to the government. That too is considered a deferment, a delay in when you have to make that deposit to the government. And they allow you actually to go into 2022. So they allow you half of that money to be paid by next year, and then the following year the other half. So you have theoretically almost 3 years to pay that portion of the taxes that you as an employer would be matching and would normally have to send in. You would have until theoretically 21 and 22, almost 3 years in order to pay that.
That's like another loan, right? It's just
another loan.
It's like interest free.
That's right. And then there is a last thing that, and I don't see that on your slide, and this is because this form just came out.
Okay.
So the IRS in their infinite wisdom came up with a form, and it's a form 7200 is what it's called. I believe it's a form 7200, and it just came out. And what that form allows you to do is get an advance credit on these taxes that pertain to. We were talking about having employees stay at home and they receive sick leave, paid leave, those kind of things. There's a way to get that credit back. But what the government wants you first to do is to apply these credits and not send the money into the government, decrease your payroll deposits you would send in, and then if you still need money, apply for them under this Form 7200. And the 7200 is a very easy form to fill and to complete, but it's a very easy form to mess up also. And that just came out. But
I just pulled it up, Joe. I just put in Form 7200 IRS and it pulled it up. It said it was issued April 1st.
Yeah, just came out. Yeah, so basically, the point of my on this slide, the discussion is that you want to take advantage of delaying the payroll taxes you're going to send in, or the one I was talking about, a credit, when you have a partially shut down or fully suspended business, or you have a significant decline in the gross receipts, and I talked about those metrics. Those are refundable credits. So if you exceed the amount of tax you would normally pay in, theoretically you will receive that money back as a refund. So that's what you want to do first before you go to the 7200. So always do these two first before you go to the 7200.
Oh, sorry, I missed that. I was trying to pull up the 7200 form, but I realized I was doing it on the other computer. Sorry. So, are there any questions? Go ahead, Joe. Go ahead.
Yeah, it's a one-page form, the 7200, and it asks you there for sick leave credit that you've given to the employees, family leave, and then it talks about the employee retention credit. You put that on the form, and then that's how you request your advance. But if you've already gotten all these reductions in having to make deposits at the bank, if you claim the credit because you've been suspended or your business has been shut down, those kind of things, you don't want to do the two, because if you go to the 7200, you request it, but you've already applied and reduced your payroll deposits by that amount. This is going to have to be paid back. So that's why I'm saying you got to do those credit reductions first before you do the Form 7200. If you're short and you still need more money, then you go and do the 7200. That's the process, theoretically.
Well, this is what I understood from what you just said, that I need to talk to you, because it's very confusing. And I see that there's a form, and I see that I probably would mess it up like I did with the other thing, because I'm not an accountant.
That's the take. You want to get all those credits, reduce your payroll taxes you're depositing first, before you go and apply for the 7200 advance.
So if there's no questions about that right now, I'm going to go ahead and move on to, because I mean, we're going to have a Q&A if people want to ask Q&A at the end, but if you're good, then we won't. But I'm not going to spend a lot of time on this stuff because Tom Cope, who's an employment attorney and he's really good and has been doing it for a long time, I'm going to have a webinar next Wednesday, but I do have slides here to just go over some general information. So with that said, I will go ahead and this is the CARES Act. So the CARES Act has an unemployment benefit component to it as well as everything else. Let me just show you what the CARES Act looks like because I actually printed it out. So this is the CARES Act. It's about this thick. I went and have been up at 3 o'clock most mornings. That's the time I get to read the CARES Act, but it's a big act and it has lots of benefits in it. So one of the things, if you do work or have businesses outside the state of Arizona and are unfamiliar with that state's unemployment agency, the Department of Labor is a good place to go to look up and find who you need to deal with relative to unemployment benefits. As has been out in the, in the media, this has been a humongous boost, especially for Arizona, who a state that doesn't provide a lot of support in way of unemployment benefits when someone files, which my understanding it's about $240 a week. So this act can boost that up to $600 more and extend the period by 13 weeks. And that's if after the period of unemployment, they remain unemployed for the COVID reasons. My understanding is it can be used intermittently for folks who have, because they decreased work availability for them because of their employer and because of the situation. I mean, even with the staff I have, we're working remotely, but it's been an adjustment. So the hours are there for certain employees, but because of this period of adjustment and trying to do everything remotely, it's taken some time and different employees are working more than others. So it provides for that, I guess, in support. I need to use the right computer here. And I just want to remind folks, *6 if you're on the telephone and want to ask a question. Or is it *9, Ellen? Is it *6 or *9? I forget.
*9.
Okay, sorry, *6. I think *6 unmutes yourself. So the FFCRA, Families First Coronavirus Response Act. Again, this is where we're going to see about paid leave, about any kind of leave, unemployment insurance, how things relative to leave are to be construed by employers. There is an exemption for small businesses because generally speaking, the FMLA and some paid sick leave, you don't get a pass on for employers who are under 50, but usually the Family Leave Act, it applies to more than 50 employers that have more than 50 employees, I should say. There is an exemption, but I think the government, I haven't received any guidelines on it. I think they're gonna make it pretty hard to try to exempt yourself unless you can show that you're gonna go out of business, essentially, if you have to provide paid leave. And because paid leave, you're going to get benefits. If you do that, they're saying, basically no. This FFCRA right now, as we understand it, went into effect on April 1st, and it's going to go through December 31st, 2020. That can be extended, as I said, with everything. All of these rules may, as we get through all this unknown parts of the coronavirus, may get extended, may get changed in ways. As Joe pointed out just a second ago, we're getting new regulations and interpretations and clarifications on a daily, at least weekly, if not daily. And we got the Treasury, we got the SBA, we got, I'm sure Congress is going to chime in soon. We got the IRS finally doing something. I've looked to the IRS in terms of, that was one thing I wanted to point out too that I didn't about the loans, is that generally speaking, like if you have a mortgage and you have forgiveness, it's income and you have to pay tax on it. These loans you don't. in the CARES Act itself, it says that this will not be, any forgiveness under those loans is not going to be considered by the IRS as income. And so you won't be paying any tax on it. And I don't know why I went that way, but other than that, it's important to know that. I gotta hit the right keyboard. So it's paid leave expansion. So it expanded unemployment and it expanded paid leave to try to keep people in the stream of commerce, if you will, and to be receiving benefits so they can buy things and they can take care of things and take care of their family. So you definitely have to meet requirements, and employees have to have that documentation, and employers have to ask for it from their employees. If they're taking qualified paid leave under the act, they have to show that, you know, there was something issued, why, you know, the school closure, on a non-essential business. I don't know, different states call it different things, but the governors basically say, you know, you're not an essential business, so you can't be conducting business in the traditional form. Maybe you can do it in a different way, online, providing different services. You get 100% reimbursement. That said, you'll probably need a loan until you get that reimbursement, but it is reimbursed. A lot, and the other thing, part-time employees are included, where traditionally they might not be under certain leave, the FMLA, for example. So, and then to calculate how much leave, I've got a slide here about that. I'm happy to share any of the information that you see here with you if you follow up with me and email the office. Part-time employees are entitled to leave for the average number of work hours in a 2-week period. If the part-time employee is normally scheduled to work set hours, she or he receives those hours. If the normal hours scheduled are unknown, or if the part-time employee's schedule varies, you may use a 6-month average to calculate the average daily hours. Such a part-time employee may take the extended paid sick leave for this number of hours per day for up to a 2-week period, and may take the EFMLA, the extended FMLA, for the same number of hours per day up to 10 weeks after that. So they can go after the other. I think the 2-week max, I think it was on the last slide, is that 80 hours? Employees can receive up to 80 hours of paid sick leave and expanded childcare leave when employees' children's schools are closed or care providers are unavailable for COVID-19 related reasons. I am talking too fast, so I apologize. Layoff or leave, what choice should I make? So these kinds of choices and decisions you need to consider lots of different things. Obviously, it depends on your business situation, the employee's family situation, business cash flow, what alternatives there are to employ that employee. Can you repurpose them in a different role? Can you get them trained up for marketing rather than being out in the field? Employees who've been with your business for a long time, they will know a lot about your business and be able to do probably lots of different things that you hadn't thought about before. So it's this kind of thinking that's going to get you through this rough or challenging period, I should say. And some people are going to do really well. You're going to develop whole new lines of business because you've been thinking about it and with the mindset that you're going to get through this instead of, you know, just saying, you know, this is a disaster, we can't do this, there's no way. You can, with the support that the government is providing and with thinking about it and maybe bringing folks in to troubleshoot, a business lawyer, a CPA, you know, or just getting together with your community of whatever business you're in and seeing what other folks are doing in other states even. Hairdressers now, I know I was seeing a lot of things that they didn't know what they could do. I know that one is sending out a DIY kit and little video or, you know, people pay a little bit of money. She sends out the dye kit and that shows them a little DIY on how to do their own hair. So it's these kinds of things, you know, delivery versus, you know, your standalone brick and mortar business. Maybe you're able to provide delivery services now. So, and because customers have new needs, right? We're all stuck at home. We're all on the computer. I'm so zoomed out. I can't even believe it. I have a Zoom call after Zoom call and I have Zoom webinars, but Zoom, it's effective. I have clients who have no other way of communication, but we're making it so that they can actually talk to me and see me by computer because they have someone assisting them to do so. So this is what these are the kinds of tools that you can use to keep engaged with your clients and call your clients, find out what they need. And it's these kinds of actions that will help sustain your business, along with the help and money from the government. If there aren't any other questions, are there any questions, Evelyn, right now that you can see?
There are some questions.
Okay, I will be quiet so you can ask the questions.
Okay. Somebody asked, we pay all of our bills on credit card. Is that interest also considered an expense for this?
I'll let Joe answer, but as far as I understand it is.
Yeah, as long as it's related to a business use, so
Yeah.
it doesn't necessarily have to be in the name of the business, as long as the money's used for, so you're gonna have to do some tracing and tracking on that to see how much of the funds were used for the business, and the interest should be deductible, yeah. And it'll apply to any of these expenses that we've been talking about, as far as the business is concerned.
Right. I mean, I think it's the PPP program says specifically that you can use it for debt obligations and the interest that's associated with it.
Yeah, that's correct.
Okay, another question. If we have real property for sale and we can't show the property, can we show that as damages? If so, what portion of its total sale on the house?
So I don't think I fully understood that. So they had a house that was for sale, and was it about to close, and then it didn't close because of COVID-19 and people weren't able to buy the house, or what
I
happened?
presume it's more along the lines of real estate agent. Bonnie, if you would clarify that in the chat, that would be great, and we can come back to it. Also, another question. You mentioned earlier the 501c3, is that only for veteran services of nonprofits, or is it all nonprofits?
All nonprofits, 501c3.
Okay. All right. So any 501c3. Thank you. And
It may have a better interest rate than the for-profits. It's I think it's 2.75.
okay. And somebody asked, I think Christine mentioned something about this Friday. And so I'm not sure what that is. Being able to apply for something. Please clarify. Solopreneurs.
I think Joe's about to answer. Go ahead, Joe. You go ahead.
In this writing. So all the businesses that have employees have submitted it as of last Friday to now, and then this Friday, sole proprietors, those typically that receive 1099s, Schedule C businesses is what comes to mind. Those folks that will be able to start applying on Friday.
Is this for the PPP, right?
Yeah, yes.
But we need to put a little caveat out there. That's like if the banks are ready, because I mean, I think a lot of people are trying to apply now. And I think you have a couple of banks that are ready. I know some banks said they were ready and they weren't. I mean,
yeah, so I think, and that's where it's important that, because I was working on a package just last night, and it's about 10 o'clock at night, and I asked the question, I said, okay, is your banker ready to start accepting this, even though they don't have direction from the SBA? And he writes back and says, what lender? So we've been doing all this stuff, and he hasn't even reached out to his lender, the banking, the business banking representative, whoever that is, and they need to have a communication with them.
Yeah, they need to find a lender. If they don't have a relationship, they need to find one.
Yeah.
I'm trying to get a list together. That's something that we're going to put on our website of lenders that we feel that are doing right by consumers, at least as far as we can tell, and that have the process. So some of them are transparent about what they're doing and where they are in the process, because not only do they have to have the application and what the documents are, they have, if they're going to work with an agent, which is like a CPA or attorney or somebody that's going to help get the application ready. Some of those lenders are saying, no, we're not going to work with them. We just want them to come to us. So it's different for each lender. So like Joe said, you got to contact the lender that you're thinking about, and maybe contact a couple if you don't have a relationship with one, because, and then here's the other thing. Some of the lenders say, okay, you have to be a customer in order to apply. And that may be an easy hurdle to overcome. I've reached out to a couple of banks, still haven't heard back from them. So I'll keep going down the list. And I'm going to go outside of the state of Arizona if I find a bank that's going to do right by those that are the applicants and things, and be
Yeah,
transparent.
the other thing I might add too is that if you're with a major bank, most of them are processing these loans, but if you go to their website, because you know that's what you're looking at, and they'll say more information coming, you have to check basically on a daily basis, often during the day, to see if anything has changed, because
Right.
once they put that up, it says, okay, we're accepting the applications, this is how you're going to do them, send them here, whatever, everybody's going to start doing it. So you want to
Yeah.
make sure you keep in touch on a daily basis to ensure that you've got the most latest up-to-date information
Right.
from the bank.
Yeah. Yeah. I haven't seen any information yet, to be honest, with the banks
And,
that are
and all of
ready.
them are different. Some of the regional banks have done a better job, like I said. Credit unions, not so much. Larger banks, I think they're still finding their way because it's a matter of whether they want to do the loan or not, because they're not making as much money on these loans as they normally would.
Right. And some of them are going to say, we're only going to do loans above 50,000. Some, I know that that's going to happen, you know, because they, you know, banks want to make money. Joe, do you have any banks to recommend? I don't. Do you?
Well, the regional banks here in Tucson that we're reaching out to is Bank of Tucson, Bank of the West, Commerce Bank, those kind of banks. Credit unions are good as well, but the large banks, it's kind of hard to get as far information for the larger banks. And so if they participate, or I mean, if they have their account with a large bank, they need to make sure they know who their relationship manager is or whatnot, and they need to start making calls and emailing them if they've not done that.
Yeah.
And I do have a list actually of banks and other entities that were recommended, but as I looked at the list, I did not recognize one of them, and neither did an attorney that that I'm familiar with that does SBA loans. He never heard of any of these, and he's been doing it a long time. So it's kind of be cautious also who it is that you're going to
Good
write
point.
to.
There are scams out there. That's a good point, Joe, about this kind of stuff. And there's, and you know, people with this kind of situation are going to try to take advantage of folks. So if it looks questionable, it probably is. Don't think they're going to do everything for nothing and as though they promise. The thing is, there are no fees with this, so nobody should be charging you any fees. That's it. The fees come from SBA to the agent and to the bank. They should not be charged. Nobody should be charging you. Obviously, if you're doing something more than just the application, you're getting advice, strategizing and stuff, somebody might charge you for that. But in terms of the application itself, you shouldn't be charged for that. That should come from the loan process itself. Essentially, what I'm understanding is that there's a percentage that the bank charges. Is it 3%, Joe?
The banks will get 3%. The agent will get 1% of that 3%. So if there's an agent involved, the bank gets 2%.
Right, and so that's why they don't want to work with agents.
Yeah, and one thing I did want to mention, so these are all non-tax relief benefits that we're talking about, the loans and all that.
Oh, yeah.
But all these other tax benefits that came out with the law, there's a whole list of things that people can do now that you could not do before, and it'll help you raise some money, get some cash, those kind of things. And if somebody is interested in getting a list of those items, they can go ahead and request that through my website, and I'd be more than happy to send that.
We'll publish it too on our Facebook page, Joe. If you wouldn't mind to do that, I'd like the more information we can put out about things. I'm happy for that.
There's some stuff you can do tax-wise that most people would not even consider, but as a CPA, I know that it's going to be a good payback for my client in recouping that money, and we're going to take advantage of it.
Sure.
And it has nothing to do with a PPP loan or anything else, you know.
Cool. Great. That's good. Any more questions, Ellen?
I don't see any more questions.
Well, thank you, everybody. Joe, I really appreciate your taking the time. I know you're very busy right now trying to help people process or get ready their PPP applications. And it's been really, really helpful for myself, and I'm sure for those that were listening, to hear from you. And we'll be posting this recording in different places for folks that want to re-listen. Ellen's kind of taking care of that, but we will get it out there so that you can listen to it again. If there's anything in the information that we put out in terms of the slides that you want follow up on, let us know. I'm happy to share that information. I would just contact our office or contact Joe if it's something he said, based on the website that we had there. Let me go back and show
Joe,
that.
if you would give me your website URL, I would share that in the comments for people.
Yeah, I have it here on
the,
the front page,
it's on there.
Right there, TucsonCPA.com.
Well, actually, no, it's TucsonCPAFirm.com.
Oh, sorry.
Yeah, that's okay.
I like Tucson CPA better.
Yeah, me too. But it was, one of my colleagues is probably getting all the inquiries right now. Like, what the heck is this?
Oh, you have, so there is a guy that, okay, but let's
Yeah.
make sure we correct that. I'll make sure I correct that, and we'll put it on, it's probably correct on our Facebook page, but I probably did that too.
And I've also got on the website, there's hundreds of different articles, and there's probably hundreds of this stuff on there now that I have not been able to go and read. There's just a lot of stuff.
Right.
I can.
Well, I appreciate it. Thank you so much, and thank you everybody who listened and participated and the good questions.
Anytime I can.
Okay, thank you. We might be calling on you again. Ellen, thank you too. Thank you for doing all this and helping us get this together.
Thank
And
you.
bye everyone. See you on the
Take
other
care.
side. Take care, Joe. Be healthy. Be well.
Thank
Be
you,
well, everybody.